Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity markets look set to extend the 5-day losing streak amidst negative global cues and geopolitical concerns which continue to weigh on the sentiment. Talk about GIFT Nifty signals a negative start coming in for the Wall Street. US stocks ended lower as soft earnings compounded the interest rate hike fears. Asian stocks slide and early deals tracking. US tech crowd, Nikkei is down by as much as 2%. Talk about FII data. They've been sellers for yet another session. And this time around, they've sold equities to an extent of 4,236 crore. Talk about DIIs. They've purchased equities to an extent of 3,570 crore. And let's talk about the FII data in terms of the FNO space. What they've done technically and where they've been buyers. Well, FIIs have been buyers in index and stock options put together. Along with that, they've also been buyers in bank Nifty options. That's the data point for you. But in terms of FNO ban, what is new in ban is Delta Corp. What still remains in the ban is RBL Bank. In terms of what we have for option queues, that is Nifty put call ratio, it's right now at 0.67 versus 0.70, perhaps indicating that we are bottoming out at this level. There has been 5 consecutive sessions of slide, which perhaps has been seen at the levels that we first saw in March in terms of just the number of declines that have come through the sessions. Earnings that need to be watched out for: Asian Paints, ACC, Punjab National Bank, Canara Bank, Colgate-Palmolive, Aavas Financiers and Vodafone Idea too, along with Aditya Birla Sun Life AMC, which will be reporting in their numbers this October 26th. But let's discuss the trade setup, strategies for the day, along with the recommendations with Chandan Taparia, the Senior Vice President. Chandan, quickly on Nifty and Bank Nifty, what's your strategy? Morning there, it is an FNO expiry session of trade. Expect some kind of volatility. How is the trade setup shaping up for you? What is your recommendation for our viewers?
Good morning, Nickey. Thanks for having me. So the indices are continuously falling down. Nifty has been making lower highs, lower lows. So till it remains below 19,222, we are expecting 18,888 in the Nifty index. Talking about Bank Nifty, weakness continues. 43,333 is the hurdle. It can drip to 42,250 levels.
All right, that's a quick assessment that we've had on the markets. Let's look at how Nifty and Bank Nifty now will open. We are expecting somewhat a weak start. And Chandan also, for that matter, we're going to come back to him and check with him what does he actually make out of the current open that we could have. Well, global cues remain very negative at this point of time. And Axis Bank has reported in the numbers which are better than what the street was estimating, of course. With the loan growth being the highest that we've seen in 7 years put together, and a couple more positives coming in for Axis Bank. Tech Mahindra, another one which reported in their numbers yesterday, but we're going to be talking about it extensively. 3 stocks extensively that we're going to be talking about, but let's address the market open there for you. Well, look at the markets right now. We're looking at the weakness coming in early deals, just hanging on to that level of 19,000 mark. Remains to be seen if that crucial mark is taken off in today's session too. But right now, the weakness prevails. Sentiment continues to be somber. Let's look at Bank Nifty just to see if we are looking at the same amount of weakness coming in for the Bank Nifty overall. Well, it is a weak trend coming in even for Bank Nifty. 0.4% lost even for Bank Nifty. Let's straight grow across first to Axis Bank and then address in the small cap and the mid cap index just to see is the momentum any different for the broader counterparts. But look at Axis Bank. That's the one which has done well, which was reported in a good set of numbers. We indicated to you right at the start of the opening bell, and there it is. We are looking at gains coming in for Axis Bank. It is a good set of number reporting in by the bank. But let's move on to the broader counterparts just to see how is the trend stacking up for the mid-cap index. And my, look at the losses. It's almost a percent lost in the mid-cap index. Well, you know, it's not something really to worry because markets look like, you know, if the markets are going to go a little bit wild given the kind of, you know, the prices that they've been enjoying thus far. So a little bit of correction perhaps looks a little bit healthy at this point of time. But small cap index there for you. Well, we are looking at losses for that one too. Almost 0.75% lost or wiped out on the small cap index too. Let's look at the other sectoral indices in that case. We're looking at IT at this point of time. Tech Mahindra has come out with numbers, and that was not a pretty picture. Overall, the IT basket guidance remains weak. Recovery is not to be seen, and the IT index right now is down and out in trade today. Pharma index, well, a bit of losses coming in for that one as well. Let's talk about FMCG, what we have in terms of that. Well, it's not faring well either. 0.6% loss on this one in early deals. Let's also talk about other sectoral indices that we have. Consumption, auto, metal. Well, metal, interestingly, particularly, is very interesting given how China's stimulus story is actually doing well. But in today's session of trade, we've actually seen profit booking even creeping in for that one. It's not a good start to the day. Nifty at 19,000. Sensex is down by 300 points. Broader counterparts are also witnessing some amount of selling pressure. It is an F&O expiry day. Don't forget the fact. In terms of realty index, look at that. That rate sensitive also isn't doing too well. Let's look at the top gainers and the top losers that we have. Just to see how is the trend stacking up. Axis Bank and Tech Mahindra is essentially the one that we need to watch out for. Idazin Bank and Tara Steel. These are some of the top gainers that we have. Let's also look at the top losers just to see how the trend has been stacking up. Advances, well, 10, declines 40. So clearly, beg your pardon, the market breadth has now been revised. We have advances 4 and declines 46. No doubt you're just seeing Idazin Bank right now just doing too well. Look at the top losers that we have. Cipla, Adani Enterprises, Adani Ports. These are some of the top losers on the list. Well, these are some of the other losers. Of course, there is an update coming in on Adani Group of Companies too. We're going to be talking about that. But first, let's go to Chandan and check with him. What does he make out of this open? 19,000, barely holding to that level. You think if the level has been, if we manage to, let's just say if that also is broken, do you see more weakness coming over for the Lal Street? Bulls, bears completely seem to be, in control of the situation. What do you make out of it?
Yeah, so the bias is clearly negative, and that is why in the beginning I clearly gave the comment that yes, weakness could continue. Nifty, we are looking for 18,888, and now the hurdle will be 19,150 with the resistance of 19,150. Be ready for 18,888. In Bank Nifty, we are looking to test 42,500 to 42,333 marks. One can buy put, can create the bear put spread, or can use any sell on bounce stance in this market.
Sorry, you said that one could initiate put at what position, please?
Yeah, so so at current level, one can go with put buying. So for an example, I can go with buying of 19,050 put. If you look at the 19,050 put, we are witnessing some activity in this strike. Looking at the data setup, we are witnessing put unwinding and call writing. That is also indicating the negative bias of the market. Expecting Nifty to go below 19,000, so this put premium can spike. 19,050 put is now trading near to 60, 65 rupees. Buy this put near to 50, put 20 rupees as a stop loss. It can go to 100 rupees.
All right. Also, let's talk about Nifty and beg your pardon, Bank Nifty along with that of Axis Bank. What do you make out of it on the charts? And what's going to be a strategy that you're going to suggest?
The weakness could continue in the Bank Nifty. Support, we are looking at 42,500 to 42,333. Hurdle will be at 42,900. Expecting further weakness. Looking at Axis Bank, we have seen huge short built up in this month, especially when it corrected on 4th of October. However, today it managed to hold. But overall, I'm not expecting a swing beyond 985 level. So Axis Bank comparatively is okay, but not positive on the Bank Nifty and Nifty, expecting further weakness in indices.
Okay, at this level, 2 recommendations coming in from you, Chandan, before we address the stocks and news.
Yeah, so I'll suggest weakness to continue in the market as well. Looking for selling idea in counter like Tata Chemical. One can sell Tata Chemical with a stop loss of 970. It can go to 910. Negative view on counter like DLF. One can sell with a stop loss of 530. It can go to 500. So weakness could continue in these stocks as well.
All right, Chandan, thank you for those views. We're just going to leave it at that. Thank you for taking out the time and speaking to us this morning.
Thank you.
All right, let's address in the stocks in news that we have. Tech Mahindra, essentially, where there is a big revenue and a margin miss which has come through. Just the basic numbers, stocks and news, not profitability is overall. The profitability is down by 28.7%. Revenue is down by 2.2%. EBIT has slipped by 32%, and the margins have come in at 4.7% versus 6.8% for Tech Mahindra. Well, CC revenue is down by 2.4% as compared to the consensus estimate of a number of around 1 to 1.2%. Revenues have declined for the second consecutive quarter. Well, this is a stock which again has witnessed some amount of selling pressure, just like their peers. Tech Mahindra isn't doing too well, has reported those subdued set of numbers. Next, I'm going to be addressing in Axis Bank, where the numbers have been better than estimates. If you can talk about the net profitability, it's up by 10%. NIIs have also risen by 18.9% year-on-year basis. Well, if you talk about the gross NPA sequentially, that number has come down at 1.73% versus 1.96%. It's very rare that you'll see Axis Bank actually seeing an improvement in NIM QOQ, where most of the peers otherwise are witnessing sharp declines. Loan growth is the best that they have in more than 7 years, and there is a buy call which is coming from CLSA. It's maintained that rating. IRM Energy, keep that on your list. It's going to be, perhaps listing in on BSE and NSE today, and the final price, issue price, has been set at around 505 per equity share. But let's quickly navigate our discussion now towards the fundamental guest that we have for the show, just to see where the trend has been stacking up, how the financials have been doing. We're being joined by, beg your pardon, Amit Gupta, Vice President and Fund Manager at ICICI Securities PMS. Morning there.
Yeah, hi.
Hi, Amit, just initial assessment of Axis Bank. Actually, no, let's just take a step back and take a little more aerial view. Let's just look at markets and how they've been faring. A bit of weakness that has crept in on account of the geopolitical concerns and the global setup that we've seen. Perhaps the weakest trend for the last 5-6 consecutive sessions, the ones that we saw in March. Do you see more weakness coming into the markets on back of that soft earnings, or you think we've bottomed out at this point level?
So I think one important macro is when the bond yields in US, they go very sharply higher. Then the emerging markets, they generally come under pressure. And that is what we are seeing right now. It's almost hitting 5%, 4.95%. And I think this is where you are seeing the FI outflows happening now in the last few sessions. So 11,000 crore around they have already taken out this month. I think another factor which is worrying the market is the geopolitical crisis. But in that, we have not seen crude jumping beyond $96 yet. So $96, if you remember, on 7th of October, when the first attack happened, we saw that there was a lot of jitters in the market and crude went towards $96. And now, even despite this, now we have already spent more than 10-12 days now. We have seen the crude is still around $88 per barrel. I think this may be a little comforting to the markets amid this particular decline. And this is where somewhere I think, market can start stabilizing. If you see from the valuation perspective, because as you rightly mentioned about earnings, the earnings in Indian markets have been growing around 15-16% on an average. So considering financial year 25 EPS of 1080 as per our maths, we believe that the current levels of 19,000, it is very close to 5-year average price to earning. And the 10-year average price to earning is somewhere close to 18,000 levels. So these two are the critical areas actually for the markets. And for the long-term investors, if they are putting their money near 5-year average or at the 10-year average, I think it becomes a very good proposition. And these kind of headwinds only, they bring those kind of levels. And this is where it's a good platform where earnings are growing. Yes, it may not grow by 15-16%. It may grow by 12-13% if the crude goes higher, but still it is in double digit. And that may lead to a bottom formation eventually for the markets.
Sure. Let me take a further step back, then ask you what are the levels that you're looking at for Nifty and what do you think will be the growth levers? Sure, you've pointed at earning growth being one of them, the growth not being as higher as it used to be, but still acts as a lever. Apart from that, what do you think will drive the markets here on and the levels that you're working with?
So as I said, the 10-year average valuation level is somewhere around 18,000. 18,000, and this becomes a very, very attractive level for investment. If you remember in 2022 also, we saw that Nifty declined to the 10-year average valuation. And that time we had seen very heavy, buying by the FIIs. And that buying happened despite the fact that that time dollar was shooting up actually. So you should give credit to the Indian markets that despite dollar surging in 2022, precisely in the month of July, when Nifty declined from 18,000 to 15,200, they put the money in the Indian market because it became very attractive and it came closer to the 10-year average. The same average is now placed around 18,000. So this is where if market falls because of any jitters, you can assume that that kind of buying from FIIs can happen. And this time dollar is not shooting up like before, because that time the dollar index was 115. This time dollar index is somewhere around 106. So still it is lower. And this is where I think this becomes a good platform for investment.
Okay, point well taken. Mr. Gupta, if I was just supposed to, or just the viewers were supposed to look at it in any different way in terms of, allocating their portfolio at this given point of time, given the sharp correction, or let's just say the modest correction that we've seen from the levels that markets were sitting at, how your allocation would work in the portfolio and which are the sectors technically also that you'd start looking at from here on?
So I think from the earnings perspective, if you see, there are two major sectors which have been supporting the Nifty in the last 1 or 2 quarters. So one is banking and financial services. So BFSI is one. Second is auto from the consumer discretionary. And these numbers, I think, are going to be better only going forward. Yes, the NIMs in the banks have reached to a certain level where they are not expanding beyond a point. But still the profitability can come better if the NPA levels remain lower and the credit growth remains buoyant. So you have seen that the credit growth, which used to be 15%, now it is somewhere around 18-19%. And I think which is a very good sign of increased lending in the Indian markets. And because why it is happening? Because there is a lot of positivity among the corporates and among the retail also, because retail, agriculture, MSME, it has grown to 15-16% easily now in terms of credit. So this is one positive which goes to the BFSI space. And the auto we have seen, because auto, it remained laggard for a very long period. And now we have seen that certain pockets have started performing. So there was a disruption also because of EV. So the companies which are moving into EV, I think they are getting that a benefit. We saw that in Mahindra and Mahindra before, that was part of our portfolio, our ACE equity portfolio. We took Mahindra, at a much lower level of around 600, but we are still holding the stock because we believe 1800 kind of levels are very easily going to be met actually going forward. The kind of aggression the promoters have shown, the kind of inclination towards EVs and SUVs. Now SUVs are almost 50% of the total passenger vehicles. It is not 15%, which was there a few years before. So that means the mix of luxury pockets in passenger vehicle has increased. And this is something that the car makers, manufacturers, they have to consider in their future pipeline. And this is where Mahindra has remained in the top most position. It was the first stock which made the life highs this time. And this is where actually it remains still resilient. I think this decline in the market is slowly giving an opportunity to add on more in these kind of stocks.
Okay, 2 points that I'd want to make there is, first, let's talk about banks. You spoke about that being still as a pocket of strength, and perhaps, we've seen NIM compressions coming in for second quarters now, 2 quarters put together. Axis Bank was a little different as compared to the peers when it comes to at least a sequential NIM compression bit and a bit of performance that came in. How are you viewing the entire private sector banks, And, since you are bullish on the space, in the pecking order, what do you like in terms of both earning growth as well as valuations put together?
So I think, as you mentioned about private banking, I think a few players in private banking are definitely doing good. They were not performers in the last decade, and that is where the new money is going into those kind of stocks. But I think another thing that you need to notice now is that the government bonds in India are going to be included in the JP Morgan bond index in next year. That can bring a lot of flows, possibly $23 billion of flows into the Indian markets. The bond yields in India, once the US bond yield starts getting stabilized, you will see a subdued Indian bond yield going forward. So who will be the beneficiary of this? Obviously, the banks who have a large government holdings, their treasury profits can become better. So PSU banks come into this picture. And that is the reason we are more positive on the PSU banks actually at this stage. Another reason for us to become positive on the PSU banks is that the corporate lending book right now is growing only by 6%. It is not growing by 17-18%. And the NPA levels are very low. That means once the corporate lending book starts growing because they are more linked with the corporates, the profitability or the incremental additions into the profits is going to be much higher in the PSU bank, so they can perform much better. This is where I think this set of stocks in this decline, you can look for additions.
Specific names, Amit, you think you'd want to give us when you speak about PSU banks?
So Bank of Baroda has been part of our portfolio, and State Bank also. If you see previously, State Bank had declined to 505, Bank of Baroda had declined to 160. And again, because of these jitters, these stocks are falling. We believe they are in a situation of making higher bottoms because of the robust fundamentals. And this is where further declines in the markets, I think this is something should remain resilient and should add on in the portfolio. And that is what we are also doing.
All right, Mr. Gupta, also let's chat about IT stocks put together. The disappointing set of numbers. The recovery doesn't seem to be at bay anytime soon. As per what the anticipation was, perhaps that the second half would be looking as better than the first half. That is clearly dismissed. There has been guidance cut by many peers down the line. But on the other side, you've seen FIIs raising their stake actually in the major IT firms in Q2 despite the weak earnings outlook. What's your assessment and which are the counters that you like?
So IT companies, see, they are more linked with the global markets. Global market scenarios are not very clear. You are seeing the bond yields still are rising. Inflation levels are still not very clear because the central banks also are a little confused. So the corporates also, why they should be very aggressive when the central banks are not in a very clear position. And this is where they have postponed their discretionary expenditure right now. It is not that the scenario for IT is going to be lull for permanently, but it is not the case. I think the disruption from artificial intelligence is an opportunity for IT. We have seen previously also the disruptions have come, but the job, at least in IT frontline stocks, it has increased rather because they come with a lot of customization actually on that front. And that is going to happen. But right now, this postponement of the discretionary expenditure, the lower prices of the deals which are happening, this is what leading to the lower revenue growth guidance. And this is what putting pressure on these stocks. I think they are in a period of time correction. They may remain in a period of time correction. And we need to look at more domestic oriented stories because that is where India is growing right now.
All right, Mr. Gupta, let's also talk about the mid-cap and the small-cap bit, which has witnessed some amount of selling pressure. Clearly, when the chips are down, when you start looking at things in a little more detailed fashion and the important matrix like profit and loss and balance sheet comes into play. With that in perspective, do you think you still would want to go for mid-cap and the small-cap pockets? If yes, any theme that is of particular interest to you?
See, there are 2-3 things here. I mean, if you compare with the 2003, 2000.
Okay, looks like we are trying to patch back with him. It looks like we've got him on a scratchy line. We're just trying to filter in those issues. But right now we were talking about mid-cap and the small-cap index and the profit booking which has come in the market. There's a veteran saying that if you can't take a 4-5% hit in the markets, you perhaps shouldn't be in the markets because these are the levels perhaps where markets will test you. And some amount of profit booking at these levels are clearly they were inevitable given the way the prices had run up. There is still plenty of quality stocks in the large caps that have been underperforming for a while and are still available at a reasonable valuation. But we're going to try and get back to Mr. Gupta and check with him what does he make out of it. The mistake that people will repeat is that of instead of letting go the chunk from their portfolio, shift to some of the cheaper stocks. That is something that you need to be really careful of. They either hang on to their positions in the hope of these stocks going past their previous high levels. Even worse, some of them will actually buy some more of these stocks. So do be very cautious of these levels that we're sitting at. But at the same time, let me also add in the fact that these levels are actually an opportunity to go buy those fundamentally strong stocks which have been, rather ignored for a while, large caps perhaps, but even the small cap and the mid cap category, which perhaps offers in a bit of otherwise fundamentally strong reason, needs to be looked on to. Adani Group of Companies, I want to talk about that because that's the entire group has taken quite a hit. It's taken beating in early deals. Adani Enterprises is down by 2.8%. If you talk about all the Adani Group of Companies, there is a bit of worry there because one of the Adani Group's long-time auditor, that is EY, is being scrutinized by India's accounting regulator as per Bloomberg. So that's the word coming in, because of which you're seeing the stock which is down and out in today's session. In fact, the records and the information that they've sought in terms of the files and the communication which needs to be audited on some of the companies controlled by Gautam Adani go as far back as 2014. It remains unclear of how long the inquiry will take, what repercussions will come out of it. But right now, you would see the entire sentiment being weighed down by that for the group companies. But we're trying to get back to Mr. Gupta just to see if he has a view coming in for the mid cap and the small cap index. Looks like we've got him on a scratchy line, but let's do a market check quickly just to see the kind of damage that we've witnessed thus far. 19,000 mark, it's taken off. We're looking at a level of 18,969. So it's still around close to that level, but there is some amount of profit booking which is clearly crept into the markets. Right now, the market seems to be down and out. Let's just say the losses are to an extent of nearly 0.75% more than that, but that's that when it comes to the entire markets. FIIs, on the contrary, I'd want to highlight this point. We've spoken about it to Mr. Gupta, but I'd want to talk about the fact that FIIs have raised stakes in major IT firms in Q2 despite the weak earning outlook. Foreign institutional investors have bought in companies like Infosys, Tech Mahindra, TCS and Wipro for September 2023 quarter despite anticipated weak earnings. But let's actually go back to Mr. Gupta and check with him about the point that he was making in terms of the mid cap and the small cap performance right now and the growth path here on.
Yeah, so as I was saying, if you look at 2-3 things here, one is in the 2003-2007 rally of the markets, the large cap to large cap market cap to the GDP had reached to almost 100%, and this time it has reached to somewhere close to 65-68%. So from the large cap perspective, there is a lot of room. Now, when the large caps have room, obviously mid and small caps, it's not that you will continuously see selling over there. So that segment also recovers. Now you compare with the same market cap to GDP of mid cap and small cap. It used to be, somewhere around in that particular period, 25-28%. Now still there is a room because it is around 19%. And when I look at the current profitability of the mid cap and small cap space, so the positive PAT actually has gone to 25%. But if you include the companies which were in losses also, because actually losses have recovered. It is not that the companies have moved from complete losses to profits, but these losses have reduced. And this is where if you combine the losses along with the profits and see the recovery percentage, it is 80% for small caps and it is 50% for mid caps. If you just see the positive PAT growth, it is 25% for both. So considering the positive PAT growth, the current market cap of mid caps, which has gone up by almost 40%, and the small cap has gone up by 55%, it looks costly. But when I look at the share of losses are reducing, and then it is substantially higher, 80% jump in the small caps, then we see that there is still room in that particular segment to perform. So these kind of macro headwinds, geopolitical crisis, which is not in our control, I think the liquidity outflow happens, and this is a phase of the market. I think we need to live through this particular phase. But despite this, I would say Indian markets are still outperforming the global markets on a broader basis. And this outperformance should continue barring these intermediate hiccups which are coming right now.
Mr. Gupta, extremely insightful conversation. Glad to have a voice like you. Thank you so much for taking out the time and speaking to us this morning.
Thank you.
All right, with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.